Top three things in my notebook this morning. Number one, Asia. Number two, the US dollar. And number three, utilities, just because everyone's talking about utilities today. So first on Asia, again, why would you mess around trying to be down 1.2%, which is of course the Russell 2000, which is a broad measure of the US stock market for the year to date, when you can be long anything that we like in Asia, which would include China, which is up again last night, up 12.5% year to date, which would include India, which is up, wow, look at India, it's up 27.6% for the year to date. That was also up last night. Or Indonesia. You know, again, you can get an ETF for any of these things. Obviously, if you run institutional money, you can get invested there as well. Indonesia also up another 1.2% this morning to up 23.5% year to date. So much like the long bond, these are double-digit returns for the year to date, and that's where you should have your money. Second point would be on the US dollar. Again, big event day with the Fed. So will the Fed get hawkish or not? And again, now relative to expectations, that's a much different question than where we were before the biggest move in currency land in 15 years on the US dollar front. So you know where I stand on this. I think that yesterday was a prelude to what's going to happen today. Dollar was down yesterday. Energy went straight up. Anything yield chasing, utilities went straight up 1.2%. And that's the next point that I want to make on that. Understand that as growth slows and the Fed gets easier throughout the third and fourth quarter, bond-like investments, which include utilities, are going to act very, very well. Now, again, it's not new news for utilities to be up for the year to date. It's been a fantastic year for the year. Utilities, which is XLU, which we have in both real-time alerts and in investing ideas, it's up 13.1% for the year to date. So again, versus the Russell, which is down 1.2, that's just called a fantastic year for utilities. People buy utilities when they need to chase yield. You need to chase yield when the Fed gets easier. Look at the CPI number this morning. You can bet your Madoff that everyone at the Fed is going to call that deflation. And what do they do when they get worried about the deflation? They institute a policy to inflate, which of course slows growth and powers those yield-chasing vehicles. So those are your top three things.